Hey, what's up? This is Attorney Dan X-Twin here coming at you and want to talk a little bit about capital raising and convertible notes. So if you were like a smaller business and you probably traditionally know about raising money by basically giving away stock in your company by to maybe your family and friends, right? And they'll own a part of your company. Um, there is another way to raise money that might be a little bit different than you've heard of. So these are called convertible notes, and basically what they are is it's a loan that someone gives you, and in exchange, when you get the next round of funding, say you go to institutional or venture capital, well they'll get some stock instead. Um, the that note will convert into shares in your company. So obviously there's pros and cons, but one of the pros is that it's typically cheaper to do this, at least on the legal side, because the paperwork is not quite as intensive as a capital raise through stocks. And so you can get it you can get it done cheaper, and usually the paperwork is kind of less onerous and less time consuming. So people wanting to get in on the early round of funding through the convertible note, the paperwork is a little bit less, and they don't have to go through it as much as if they're buying stock. Now, what the cool deal is about convertible stock for convertible note for the note holder, for the person giving the loan, is that they can buy the stock at the next round of financing for a discounted rate. So let's just say a note is $100,000 loan. The loan is $100,000, and you are giving a 10% discount for those making this early loan, and then they'll convert it on the next round of financing. So what they can do is during this next round of financing, say you are selling one share for $100, they can get their they can get shares at $90 per share, so that you get a 10% discount, and so they actually get more shares per dollar. So at a 10% discount, they actually get 1,111 shares for their $100,000, compared to 1,000 shares for $100,000 investment at that particular round. So it's kind of a new, not new, but it's a different way of fundraising for your company at the early stages before perhaps institutional or venture capital. So something you might want to think about if you're kind of looking to raise money for your company, and you might think you have multiple rounds of financing. So hope that's been helpful. This is Attorney Dan X-Twin coming at you, and I'll talk to you soon.